Hello and welcome back to another episode of The Mark Moss Show. We are talking about the decentralized revolution, talking about the way the world is changing by looking at it through the lens of politics, finance, and technology. Of course, Bitcoin is this technological revolution that is changing the world. And so we're looking at this. It's like watching paint dry. You don't see it happening, but it's happening. And I'm trying to narrate this for you so you can understand why the world is just so crazy today, and how you can understand it, and of course, how we can navigate ourselves through this. And so probably the biggest story that, the biggest never-ending story seems to be inflation. And I want to talk about that. I know I've been talking about it quite a bit, and I'm talking about it quite a bit for a couple of reasons, and I'll break them down real quickly. First of all, it's a massive problem with massive implications that affects every single one of us. I know for myself, I drive a truck, and it's gone up more than double to fill up my gas tank, which is not too good. Now, luckily for me, my commute is very short, just a couple miles. But I know that here in California, some people commute an hour each day or more, and that's a big thing. But it's not just gas. I mean, it's food, and so food and energy are the two things that we're really being affected by the most. And so this has massive implications. Now, for those that make less money, it affects them even more, because the more you make, the less percentage of your total income is taken up by your food and energy. But if you're living kind of paycheck to paycheck, it's mostly just food and energy that you're buying, and it has an enormous effect on there. The other reason why I want to talk about it is because it's very misunderstood, and I think intentionally. I think it's intentionally, or I think you are being intentionally misled, so you don't understand what the situation is, so you don't place your anger into the right place. But as misunderstood as it might be, the leaders, the powers that be, the ones that are supposed to be driving the bus, they seem to not know anything about what's going on either. I got some clips I'm going to play from you about that. So we're going to look at this. I want to explain really what are the two main drivers of this. So we'll talk about that. Like I said, we'll talk about what's happened over the last couple of years that's really pushed us into this level that's just unsustainable. Talk about what this catalyst is that's really going to get the market to drop. Like I said, I have some clips I'm going to play from some of our elected leaders and non-elected leaders, what they're saying directly from their mouth. We'll look at ways that you can protect yourself from this, and then I have something that isn't too good, something that the head of the Federal Reserve is saying. And I think if you read through the words of what he's saying, it looks like it could get even worse. So I'm going to break all that down for you and more here as we're listening to The Mark Moss Show, talking about the decentralized revolution, talking about Bitcoin, talking about politics, finance, and technology. And again, talking about inflation, but giving you a whole different perspective on it. So the first thing is inflation is very difficult to understand for a bunch of different reasons. I'll make this pretty simple for you. I like to take these complex subjects and make them easy to understand. So it's difficult to understand because there's different definitions for it. So per the Austrian economics view, inflation is when the money supply increases. So you inflate the money supply, and then like prices going up, supply chains breaking down, that's the result of the money supply going up. In today's day and age, typically what we call inflation is prices going up. So asset price inflation or consumer price inflation. So the government reports this inflation number to us. It's over 8%. That's the CPI, Consumer Price Index. So they take a basket of goods, they measure that basket of goods, and they see how much those prices go up. The reason why that's a horrible way to look at it is because my basket of goods is different than your basket of goods. Certain things, like if you're trying to buy a house in Austin, Texas, or on the beach in Miami or in Southern California, inflation on your home purchase is going to be way different than your home inflation would be in Indianapolis or in Kansas City. So it affects us all differently. Also, you may not be trying to buy a home. And maybe I am. You may not be trying to go to college or pay for medical care. Maybe I am. So certain things like Netflix and Netflix and pizza, those things haven't gone up very much. And if you're not paying for rent, living with your parents, watching Netflix, eating pizza, inflation doesn't really bother you. But if you're buying a home on the beach in Miami and you're trying to send your daughter to college, and you have medical bills, then inflation's hitting you really, really hard. So you understand inflation is different all over the place, and it affects us all differently. So that's why it's a horrible way to look at it. And then why do prices go up? Well, there's a trillion reasons why prices would go up. And so that's why we look at the increase of the money supply causes all types of distortions that cause prices to go up. Now, the powers that be, again, want to intentionally mislead you. And they talk about them in really two main ways. And really, there's four main drivers. And so you might hear about these. So one of them is called cost push. Cost push. So cost push inflation is the decrease in the aggregate supply of goods and services stemming from an increase in the cost of production. All right. So first of all, I'm gonna give you these four drivers, but just put this in your head first. All prices drive off of supply and demand. If there's more supply than there is demand, prices come down. If there's more demand than there is supply, prices go up. So these are reasons why supply and demand would be affected. So cost push. So when the price of goods go up, when commodities go up, when shipping prices go up, when less people are working and companies raise their prices, when costs go up, then those high prices get passed on to you, which the cost of production going up increases the price you're going to pay. Cost push. Okay, makes sense. It's kind of stupid to explain it maybe. And the second one is called demand pull. And the demand pull is the increase in aggregate demand categorized by four sections of the macroeconomy: households, business, governments, and foreign buyers. I think it's ridiculous to break it down like this, but demand pull. So when there's extra demand, when there's more demand than there is supply, prices go up. I mean, it's ridiculous to have to break this down, but this is how the government breaks it down, and I think it's intentionally meant to confuse you. Now, there's two other contributing factors to inflation that include, one, an increase in the money supply of an economy, and two, a decrease in the demand for the money. So an increase in the money supply of the economy. So when you increase the money supply, now you have more money chasing the same amount of goods. So that's demand pull. So they increase the money. All that money creates more demand, and it pulls the prices higher. So what we've seen is kind of two things. So they want to blame it on the supply chains breaking down, for example. So the supply chains break down. Less people are working today, for example. They have to pay people more to get them to come to work. So that's cost push. That's pushing the expenses up. It's cost pushing the prices up. But it also, why is supply chains breaking down? Well, because in the United States, we're ordering about 20% more products than we were before. Why? Why are we ordering 20% more products? Because there's so much money, which has increased the demand. So the demand is pulling the prices up, and the cost is also pushing prices up at the same time. Again, just understand supply and demand. So we have a massive food inflation, not just in the United States, all over the world. So why are food prices going up? Because we don't have enough food. Energy prices are going up. Why? Well, we don't have enough energy. But there's also other reasons. I'm not going to dig super deep into them. It's probably for my next show. But there's also reasons why energy prices are going up, and that's cost push. So regulations that are being imposed on farmers growing food or on energy companies getting that food out, the energy out, pushes the prices up, plus the demand. So there's different factors. But the reason why I wanted to break this down to you first is because this demand pull piece, I'm going to circle back to it at the end. And once I tell you what these people are saying, it's going to make sense. So that's why I want to set that up for you before we get into that. Now, one of the best ways I like to protect myself from inflation, or really, is thinking about my purchasing power. I want my money to be able to buy me more goods and services in the future than it does today. Now, dollars have been losing about 10% of their purchasing power annually for the last 100 years. They've been losing about 20 to 30%, probably about 30% of their purchasing power over the last 2 years. So how can I increase my purchasing power? So I like to think about that. One of the best ways to do that is Bitcoin. Now, if you zoom out with Bitcoin, I get it. The last 6 months, it's down, but it's up 250% over the last 24 months. It's up thousands and thousands of percent over the last several years. And so if you zoom out, it's really done really well at preserving our purchasing power. Now, a lot of people want to know if now is the right time to go buy Bitcoin. And I think one of the best ways to get Bitcoin is through dollar cost averaging. And the way I like to do that is with mining. I can put some money up right now to buy some mining equipment, and then every single day it produces Bitcoin for me at the price of that day. It's a way I can get it way under value, always buying undervalued assets. Now, mining Bitcoin isn't the easiest thing in the world to do, to produce it, to make cash flow from it. But I use a company called Compass Mining. You can check them out online, compassmining.io. They make it super easy. You just go to compassmining.io, choose whatever machine you want, choose what facility you want. It puts out a score that tells you like how good of a deal that is, how much money you'll make ultimately. And then you can decide if you want to do it. You click the button, you add it, and you can start mining Bitcoin like a pro. Compassmining.io. It's no surprise, right? Inflation's the highest it's been in 40 years. No surprise. Homes are high, gas is high, food is high. Of course, the two main things we need, energy and food, are going higher. The one thing to keep in mind is it's the highest it's been in 40 years. So, it's been this high before, right? No big deal. Yes. But when it was this high before, it was in the 80s, and we had to take massively drastic actions in order to get the price of inflation to come back down. Under President Reagan, the Fed Treasury, Paul Volcker, raised interest rates drastically to get inflation to come back down. But this time we're in a much different place than we were before, because now we have massive amounts of debt. Particularly, we have over $30 trillion of federal debt. And the problem is, if they raise the rates, the interest on that debt becomes unsustainable. I mean, it's already unsustainable as it is, but it becomes it could, if we get interest rates over 3%, we could see the interest on that debt becoming more than the tax revenue, the income tax revenue that the government receives. That would be drastic. That'd be really, really bad. And so we're in a much different place. We didn't have that problem in the 80s. And so those tools that we used to combat back then, we don't have today. But how did we get here? Let's walk through that real quickly. How did we get here? Well, easy. Spending more than you make and living off of credit. If you've ever tried it in your household, it doesn't last very long. You can live off your home equity line, you can live off your credit cards, but eventually you can't pay those bills and that credit runs out. And that's exactly how we got here. Like I said before, we've been seeing about a 10% inflation for the last 100 years, but it's really accelerated over the last 2 years because, of course, the war on COVID. And in order to fight that war, in order to combat the economic and financial effects of the war, the Fed did extraordinary measures. Now, I call it the war because obviously it was a war on COVID, but it wasn't COVID that was the problem. It was the response to it that was the problem. And so the entire United States economy and global economies were forced to shut down. You had all the small businesses, all the mom and pop businesses here in Los Angeles, businesses that have been around, families, for multiple generations, icons, marquee spots in Hollywood, gone, just out of business. Everyone's just shut down. And so in order to combat that war, then they introduced a couple things. One, they brought interest rates to zero, ZIRP, as we call it, zero interest rate policy, ZIRP. Did that again. They started unlimited QE, quantitative easing. And then they used that quantitative easing, that money, that new monetary money that they've created to buy mortgage-backed securities, MBS, U.S. Treasuries, corporate debt issued by corporations, corporate debt ETFs, municipal debt, so that's states, counties, things like that, CDs, certificate of deposits, student loans, and auto loans. So they used all this money to start buying all that up. And the total bill for the Fed's interventions of this were $5 trillion. Now, if we put that another way, the Fed was printing an amount of money equal to Spain's economy every 12 months. And the entire output of their economy, we were creating out of thin air every 12 months. Now, to put this into something you can understand, because this is difficult. We throw these numbers around, million, billion, trillion, whatever. A trillion, 5 trillion is 5,000 billions, or 5 million millions. It's a lot. And if you laid out $5 trillion in $100 bills, lengthwise, back to back to back to back, it would go from the Earth to the moon 10 times. It's a lot. It's a lot of bills. So they stimulated all the way through the crash, and it wasn't so much even that they stimulated through the crash. The problem was that they continued to stimulate for way too long. So as the market started to recover, as unemployment continued to drop, the economy started to recover, business started opening back up again, They didn't get their foot off the gas pedal. They kept it going. Now, if you look at a chart of CPI, Consumer Price Index, which is the number the government gives us to measure inflation, you can see that it was going along, and then just started spiking almost straight up vertical. A chart that would be so simple that a third grader could look at that chart and could go, wait a minute, that's a problem. Look at this number going straight up. You could see that. And what's astonishing is that if a third grader could see it, how did the Fed not see it? So the Fed has over 400 economists, PhDs on their payroll, 150 research assistants on payroll, have access to the best real-time economic data, the best and the brightest that we can produce. And yet Janet Yellen from the Treasury and Jay Powell from the Fed were both blindsided. They're both blindsided by this. As a matter of fact, let's hear it directly from them. I got a clip here. Let's go ahead and play this of Janet Yellen talking about her and Jerome Powell.
When I said that inflation would be transitory, what I was not anticipating was a scenario in which we would end up contending with multiple variants of COVID that would be scrambling our economy and global supply chains, and I was not envisioning impacts on food and energy prices we've seen.
So they were blindsided. They didn't envision the impacts on food and energy. They didn't think through what would happen if you create 5 trillion more currency chasing limited goods and services. Again, this is elementary. If you increase the demand and you don't increase the supply, or in this case, you reduce the supply and increase the demand at the same time, what's going to happen? You already know, but of course, Jerome Powell and Janet Yellen said, we didn't think through this. We didn't think through what would happen to food. We didn't think through what would happen to energy. And they kept saying, first, it's not a problem, it's not a problem, it's not a problem. It wasn't a problem. We can't get the inflation we want. Now, like I said, if you look at the chart, or you just think through it for a minute, if we increase this money and we decrease the goods and services, price go up. Anyone could tell you that. An elementary person could tell you this. I had played a clip before on the radio show before where it was a clip from, Kristalina Georgina from the IMF, and it was with her and Jerome Powell and Yellen, I believe. And they were laughing. And Kristalina from the IMF said, I guess we didn't think through the unintended consequences of this. And then she said, I guess we're sort of like a bunch of 8-year-olds playing soccer. Instead of covering the field, we just chase the ball around. So she said, we're like 8-year-olds. But to my point, 8-year-olds or third graders could have spotted the problem, and yet they didn't. I have some more clips that I want to play when I get back because the story is changing now. It went from not a problem to we have it under control to it's just transitory. And now the whole narrative is completely changed. So I'm going to play these clips so you can hear it directly from their mouth.
Powell indicated himself, both of us probably could have used a better term than transitory. I do expect inflation to remain high, although I very much hope that it will be coming down now.
So they should have used a word better than transitory. Like persistent, maybe. Out of control, potentially. Or how about our fault? Maybe any one of those words could have worked. But no, they just said, well, it's transitory to like, oh, well, I guess we could have used a better word. And they went from we can manage this. And so this is what you have to pay attention. When these people talk, you need to really dissect every word. It went from we can manage this to now we hope. Now we hope. But it's even worse than that, all right? So now they've gone from we can manage it to basically we lied to you or we didn't know better. So is it a lie or are they really incompetent? In my opinion, either way is a problem. If if one of your friends, one of your business associates, your employees, your wife, if they lied to you or they are incompetent, you would probably remove them either way. Either way, whether they're incompetent or whether it was a lie. But now they're changing this narrative to we should hope. But Secretary Yellen came out and said now in a report about a third of U.S. inflation is a result of new and used cars, all due to the shortage of semiconductors. Really? See, now they're trying to shift the blame. They're trying to shift the blame. They're trying to change the narrative on us. So now a third of the problem with inflation is a result of new and used cars. Does the shortage of semiconductors explain the 20% year-over-year house price increases? Does it explain that? Does it explain the food going up, right? Does it explain the gas going up? The food and energy are the two big things. Does used cars or semiconductors? Well, first of all, used cars have already been built. Now, semiconductors don't put out as many new cars. If there's not as many new cars, I guess they buy used cars. That makes sense. But why does food go up? Why does gas go up? Why do homes go up? And the point is, it doesn't. The point is, it doesn't. So, but my point is, they're trying to shift the narrative, and then the narrative changed to Senator Elizabeth Warren, who really cares for the little guys. We saw her last Thanksgiving, last November, saying the problem with inflation is these greedy corporations. That's always her line. It's always these greedy corporations trying to take it to you. And of course, we need the government to protect us from these greedy corporations. And last November, she said it was the turkey manufacturers. It was their fault. They are gouging you on the price of turkeys. And somebody, me and the government, we should tell them how to run their business so they don't gouge you on turkey. So it went from all this money we printed caused a problem. We didn't think about it. We didn't understand that it would do this. We just didn't think through that. To, but don't worry, we have it under control. To, oh, it's transitory. To, oh, shoot, it's a problem. To now blaming it, oh, it's on semiconductors. And then we have Elizabeth Warren saying it's big corporations. I'm reading this quote. Big corporations have been price gouging consumers and using inflation as cover to pump up their profits while Americans struggle with rising costs. How dare they? How dare they pump up profits using inflation as cover? We need to enforce our antitrust laws and crack down on corporate price gouging to bring costs down. She knows absolutely zero. She knows less than zero about economics 101. All right. In a free market, you don't have price gouging. If I decide that I want to sell my gas for $20 a gallon and everybody else is selling it for $6 a gallon, how much business am I going to get? I can't gouge, right? If a business wants to gouge you on the price of their turkeys, someone else is going to sell you turkeys for cheaper. Right? That creates an opportunity. So in a free market, economics 101, we're always looking for that. If someone's charging more, I can charge less. I'm going to do that. Through competition, prices always come down. We get better products. We get better service. We get better prices. Only through their cracking down does it give the businesses the ability to charge more. So what do I mean by that? Through their cracking down and passing more laws and regulations, what it does is it protects these big businesses by putting all these barriers, all these gateways, so new competition isn't able to come into the market and compete. It's through their cracking down. They want to spin this narrative that it's the reason why we have inflation isn't our policies, isn't because we didn't think through all these problems, isn't because we didn't print $5 trillion. It's because of these corporations. And if you let us, as the government, have complete control over the economy, then we could magically make the prices better for you. That's what she's saying. So just notice this narrative shifting. And it's shifted even more. And this is one that I just can't get over. If you're not aware, the White House press secretary we had a change over there. I don't know all the reasons. Jen Psaki is not with us. I believe what I've looked into a little bit, we needed more equitable. We needed more diversity. So we needed a black immigrant lesbian, I believe, because we couldn't have a white person in there. So never the case, we hired off of those demographics instead of just trying to find the best person for the job. And so now we have the new White House press secretary, Karine Jean-Pierre. And now she's trying to tell us a completely different narrative about inflation. Let's play that. I want to play it directly from her mouth because you wouldn't believe it if I said it.
What I'm trying to say to you is that the economy is in a better place than it has been historically. And so we feel here at this administration and other experts as well, is that we feel that we are in a good position to take on inflation. We are in a good position to really start really working on lowering prices.
Wait, did she say that we're in a better position than we have been historically? Is that what she said? She said we're in a really good position. Historically, so remember when inflation was this high in the 80s, we didn't have any debt, and we could just raise the interest rates. But today we have $31 trillion worth of debt with over $200 trillion in unfunded liabilities. That's a way better position? That's a way better position? This quarter, the first quarter of 2022, we saw growth, GDP growth, economic growth, go negative. We went from 5% growth to minus 1.4%. That's great historically. I got more stats. If she says that we're in a much better place historically and our economy is in a very good place to take on this inflation, well, I got some stats that are going to tell you otherwise. And we're going to get back to what they're really trying to do here, the sinister plan that they have for us. And it goes back to where we started with this demand push, demand pull and cost push. If you understand those two things, when I get to the end of this, you are going to know what is coming next. And like I said, it's not good. But we just have to pay attention. What are they saying? Each word is meticulously picked to try to tell us this narrative, this spin this narrative. They're gaslighting you is what they are. They're gaslighting you. Janet Yellen and her husband have a combined net worth over $10 million, despite every single one of her public predictions being completely wrong since she worked at the San Francisco Federal Reserve Bank and was head of the Federal Reserve and is now head of the Treasury. She's been wrong every single time. And she's a public servant. And she's worth over $10 million. And she continues to do a horrible job, and she still has her job. Why? She's either completely inept or she's evil. Either way, it's a non-starter for me. Grounds for dismissal. But back to this last clip that I played of the new White House Press Secretary, Karine Jean-Pierre. She came at it from a totally different angle, and this is the important piece. They're starting to pivot, and you need to pay attention to what they're telling you. So she said in the clip that historically the economy is in a really good place, and we think that we can just take on the inflation. We're good. We have our economy so strong. We have so much money saved up. Everybody's so rich, they can just afford to pay $10 a gallon for gas. It's not even going to matter. That's what she said. That was her words. I played the clip. So I was looking at some of the stats. So let's see, historically. So and I talked about in the 80s how we were able to raise rates to fight inflation. We can't do that today because today we have $31 trillion of debt. So historically, that's really bad. Really, really bad historically. We have GDP growth, so economic growth. So you'd measure the health of the economy by how much it's growing. Remember, money is not wealth. Goods and services are wealth, right? If we had money on a deserted island, that money is no good to us unless we have goods and services to buy. And so we want to look at the GDP, gross domestic product of a nation. Are they producing goods and services? And instead of the 5% we were hoping for, it was only negative 1.4%. Negative 1.4%. That doesn't sound very good, does it? Does that sound historically healthy? Historically in a great way? Historically in a place that we can take on these crazy prices? Let's see. Exports declined by 5.9%. Exports, remember, the wealth is in goods and services. China's been able to grow so wealthy because they manufacture most of the goods and services. Russia, despite all the sanctions that are being done on it, is still doing amazingly well because they export. They export things that the world actually wants and needs, things like energy, gas and oil, things like food. What does the U.S. have? We have services. We have Facebook. We have Netflix. We have Google. Those are good services. We have financial services. We export dollars. What else do we manufacture? Now, in all fairness, the United States does export a lot of oil and energy as well. But our exports declined by 5.9%. Does that mean historically that we're doing great? Well, because we're down from where we were, so that can't be. The economy is shrinking and inflation is running hot. What that means, when the economy is shrinking, producing less goods and services, less wealth, and inflation is running hot at the same time, so economy is going down, but prices are going up at the same time, that's a very bad predicament to be in. It's something called stagflation. You might have been hearing about this quite a bit lately, and it is not a good situation to be in. And as I've been talking about, inflation, stagflation taking hold in the first time since the 70s. Now, why 70s is that? Well, not why. That's when it happened. But there's some other similarities that happened in the 70s. So energy analysts are predicting that we could have fuel rationing in the United States this year. And even worse, specifically diesel fuel rationing. Now, if diesel trucks are rationed on fuel and they don't have fuel to drive around, that's a big problem. But that can't happen in the United States, right? I mean, we're one of the largest energy producers in the world. How could we run out of gas? That's ridiculous. It could never happen. Well, it did. It happened in the 70s. You'd only be able to fill up your car on certain days of the week. It did happen in the 70s. Now, can this be fixed? Well, I mean, it could. We could see them try to pivot back. I mean, basically, they do the opposite of what they're doing, right? The problem is the Federal Reserve is designed for one thing, and that's to create money. That's the whole purpose of what they were created for. Before the Federal Reserve, we had the era of free banking, and people could just stand up their own banks and create their own currencies, and they went bust all the time. And so the Federal Reserve said, hey, let's create this Federal Reserve, and we'll backstop all those banks. And if they go bankrupt, we'll create money so they don't go bankrupt. So that was their whole purpose. And as they create this money, they create these distortions in the market, this demand-pull situation, and it creates these distortions in the market. So how can they solve this when all they have as a tool is a money printer? It's kind of a problem. So, right, all they can do is expand the money supply. That's all they can do. Now, and they want us to believe that that's a good thing, right? Like a lot of people want to debate this all the time, and you may want to debate this. Like, we need the money supply to expand, right? Something like Bitcoin could never work because it's a fixed supply. But we can't have a growing economy unless the money supply expands. We have to have the money supply expanding, right? Well, that's what your textbooks have been telling you for a long time. Why? Because that's the policy the Federal Reserve wants. They want to create money. They can't teach you that creating money is bad. Of course they got to teach you that you got to expand the money supply. It's not the way it works. We can do a whole nother show on that. But basically think about this. Money is not wealth. Wealth is goods and services. So you take all the wealth, all the goods and services of the world, and divide it by the money. That's it. That's how it works. The money buys the wealth. If you increase the money supply, that's going to push the cost of the supplies up. So either the value accrues in the money or the value accrues in the wealth. So what does that mean? If the value accrued in the money, that means that money buys you more goods and services in the future. Life would be getting easier for you. All right? But they lie to you, right? We need the money supply to expand. And doesn't it feel good when your asset prices go up? Don't you want your home going up? Don't you want your stocks going up? And so we all cheer for inflation because we want those things to happen. All right? But here's back to the end. Fed Reserve Chairman Jerome Powell warned Thursday that getting inflation under control could cause some economic pain. Quote, so a soft landing is really just getting back to 2% inflation while keeping the labor market strong, and it's quite challenging to accomplish that right now, end quote. So what he's saying is that to get inflation under control, it was going to cause economic pain. So let's come back all the way full circle to where we started. Demand push. So there's two ways to solve this energy and food inflation. If we need to bring energy prices down and food prices down, what do we need? We need more supply. Simple, right? Or the scary, darker, sinister side is we could lower demand. So if we can't bring on the Federal Reserve, obviously can't create more energy or food, but they could lower the demand by taking the money away. If they take the money away, if we push gas up to $25 a gallon, how many gallons of gas are you going to be buying every day? Not very many. And so that's the demand push, the cost pull. They can't affect the cost push. Because energy is what it is. They can't print that. They can't print food. But they can affect the demand side by taking the money out and crashing the economy, which is exactly what's happening. He says right here, it could cause some economic pain, end quote. So hopefully you understand what is going on. The way that we protect ourselves is by getting out of that financial system altogether and putting our money into things that can hold up against this inflation that we're facing. You're listening to The Mark Moss Show. We're talking about the decentralized revolution, talking about as the pendulum is swinging from a centralized system to a decentralized system, of course, being spearheaded by Bitcoin and decentralized technology, looking at it through the lens of politics, finance, and technology. If you're not following me on Twitter, you should, @1MarkMoss. I post a lot of this as I'm digging through this on a regular basis, so send me a message there. Let me know you hear me. And that's what I got for you today, all right? Thanks for listening. Since you've stayed to the end, I know you like this video, which means you're probably gonna really like this video right here and this video right here.